Welcome back to the channel. My name is Brad, and today we're calling it. We're going to call which ETFs are the best S&P 500. We're going to make those calls. That's what you're looking for. Stick around. Well, I'm finally going to expose my secret little equation. Yes, I've been trying to explain this equation to people. This is Brad's equation of retirement. Go ahead and sit down and you can do the math yourself and figure out how you can retire off of this equation. I've been asked about this equation and I'm just going to fully share it. I break it down to a very simple mathematical equation, but this is the actual equation behind my whole entire strategy. So feel free to sit down and break out the calculus tool and figure it out. But we're going to talk about cover call ETFs. We know cover call ETFs lag the S&P 500. We can go to ticker symbol BXM. We see it. It's right on the chart. This is not a hidden chart. This has been around for over 10 years now. It's not a hidden chart. We should know this chart if we are in cover calls. We should know it and live by it. Why is this chart so important to us? Because we can go back in time and look at FTHI and see how it has compared to SPY over a long period of time. We know FTHI has been out there. We know that there's 10 years of history out there on FTHI. So we know this. And why is that important? Because we also know NEOS follows that exact same table that I showed before, BXM. This is literally on their website. They are not hiding it. They're showing how they are tracking the BXM ticker. So when I look at FTHI, SPYI, IVVW, I see overall one's up a little more than the other, one's down a little more than the other, but at the end of the day, they are so close. You pick. They look like they all track to me. The most recent downturn, we know SPY did better than SPY. We've known this that since February, March, April, that they have not gone through their strikes. And that is why they're beating the underlying index. That is not always the case. And we can see that on this chart. We know historically they do not beat SPY historically. If we look at total returns for the last month of FTHI, IVVW, and SPY, they are right all on top of each other. Again, you pick which fund that you want because at the end of the day, there's not that much difference performance wise. A little bit here and there, but that is all up to you and your decision. But you can see that there's no huge discrepancy between these funds over time. And we can go again back and look. We can see these funds are very similar. I choose SPY. If I go back to when SPY was created, you can see that sometimes FTHI beats SPY. You can see that sometimes that SPY beats FTHI. But let's get back to this BXM index because this is where all this confusion comes in because about a year ago, a little over a year ago, they came out and said, hey, we have a new tool so we can beat this BXM index because the problem has always been total returns falling too far behind SPY in retirement. And it wasn't me that said that. It was other people that said that. And those other people happen to be iSpy. And I don't talk about iSpy very often, but iSpy came out and showed, hey, we can take that cover call index and we can do better than the index. We can do much better than the index. So we're looking at this. They actually have a new S&P 500 daily covered call index. I don't know if you know that. There's not enough data on there to go start putting it out there. But hey, we know that there's a new index. And we know that we can track this index and we can see where I Spy is compared to that index. Now, what I Spy historically said is, hey, we can do higher distributions than MLPs, REITs, high dividend stocks, and the S&P 500 dividends. This is important to retired people. We're looking for those distributions so we can live off of them. This the whole entire conversation of this is income, and we're trying to live off this income. And then we go back to that chart. I Spy traditional, and that is that BXM index. They're beating it. So if I put this on a chart and I am looking at SPY, T Spy, and I Spy. At the end of the day, you see that I Spy, T Spy, and XDTE outperform SPY at different time periods. One time it's up, one time it's down, one time it's in between. But when we get to what happened on April 9th, and this is the important factor. April 9th came along. April 9th was a historic day. So what we see is I Spy is still leading. But what we end up seeing is I Spy and T Spy right on top of each other. And XDTE fell back. I will also go ahead and say August 9th was a historic day. But on August 10th, some funds made a lot more money than other funds. And the fund that you would think made the most money would have been XDTE, and it wasn't. You would think on the 11th, XDTE would have been making the most money, but they weren't. They're not dynamic. They fit into one single, we're going to do this every single day, and it doesn't matter what happens to the market. And that's why you're actually seeing them fall behind a little bit because they didn't change and they weren't dynamic. But you can see that I Spy was able to do it and T Spy was able to do it. If we look at price change, and this is an important factor, if we look at price change, why am I not a fan of XDTE? It's right there on the chart. Somebody wants to know about NAV erosion, and I sit there and go, SPY, T Spy, sit there right on top of each other on total returns, and then you get this XDTE falling off the face of the earth. Sorry, it is what it is. It's just literally, I can't say this enough. It is what it is. You're seeing NAV erosion. And this whole video is because I saw 3 comments, 1 on a video, 2 on Facebook, and I'm just addressing them. You're seeing XDTE fall away. You're seeing T Spy and I Spy holding their own. You're seeing Spy I over a long period of time will not keep up to Spy. We know that. But what we don't know, and this is where the factors come in, I Spy and T Spy, when they're supposed to be able to keep up on total returns with the index or slightly beat the index. So April 9th shouldn't scare us away. XDTE, good fun total returns, but you better have it in a IRA or a Roth. It's not as tax efficient as other funds. We're just going to go ahead and put it out there. The next contenders is GPIX. GPIX does not follow the same BXM ticker or tries to beat that ticker. They do something different. They write calls on a little portion every Monday Friday night, I do believe, but they post it on Monday and they tell us where those calls are and how much. Right now, they're in the teens on how much they're writing on that fund to make that 8.5%. I've seen them as high as 30% of the portfolio. So you go, wait a second, 30% of the portfolio, they get more potential for upside. And that is why they're beating the index overall. They're beating the BXM, they're beating FTHI, and FTHI is very similar to SPY, and you can literally see this on a chart. The other contender that you may want to think about is Bally, BALI. You can tell over time they are beating FTHI, which would be similar to SPY, and they're doing a pretty good job. So that's BALI has clearly shown that they can do something different than the other funds. If I took a look at PBP and DGIA, well, I am just going to go ahead and call them pretenders. Would not invest my money in them. Not financial advice or any other advice. But if I look at the chart, it tells me no, those aren't the funds for me. Jeppy. Let's talk about Jeppy. Jeppy was the golden child, but Jeppy right now is right on a FTHI. Don't know what to tell you about Jeppy. I do not invest in Jeppy, and I will not invest in Jeppy. And the reason being is the ELNs. I'm not a fan of the ELNs. You might be a fan of the ELNs. They also put your money at risk, and you didn't even know that they did that with those ELNs. And if you don't know what I'm talking about, sometime when there was financial crisis, especially with Credit Suisse, their ELNs were with Credit Suisse. They stopped telling you who holds those ELNs. So all I'm going to do is throw my hands up in the air. You've been warned. Nothing else I can tell you. XYLD. Well, XYLD, you just might as well call that FTHI. I mean, it beat it for a time period. It's not beating it now. Over the long period of time. I mean, this is what we call grandfather of funds. It's not going to do any better than SPY. Personal opinion. If you hold it, hey, good for you. It's something very similar to a SPY, FTHI. And now we can talk about tax efficiencies. And some people will go to SPY because of tax efficiencies over other funds. And that is something to take into consideration, that your T-SPY and your SPY are extremely tax efficient, extremely tax efficient. They're trying to be tax efficient. And that is a good selling point for those that are holding them in a taxable account. XYLD, over a shorter period of time, you can see what happened to it. It is really an FTHI. But we're going to look at a couple more. DIVO. DIVO clearly has done better than some of these other funds when you consider it against SPY. For me, the distributions are not high enough for me to live on. So I eliminate it because it doesn't have high enough distributions. I want to go on, say a couple more things. This right here, the graph, AMLP and BIZD, you can see that they're beating SPY. You do not want your accounts to fall behind the market. You want them to outpace inflation. If you have covered calls and all you have is covered calls, you're going to get tapped. It's just the way that it is. You're not going to be able to stay up with what you could have had with the market. So you need to diversify. And the last one I'm going to put up is Maine. Maine has just done well. It's a business development company, but you can see over the long haul, the long period of time here. This isn't last week. This isn't last month. This is the long haul that it has beaten SPY. You need these type of funds to be able to appreciate your capital so you have the capital available in retirement. Just don't know what else to say to you. So hopefully you find this entertaining and educational. And until next time, God bless.